It's been a crazy week in the market. We have a lot of stocks finally started to go down. A lot of the Magnificent Seven stocks, Google, Apple, Amazon, Nvidia. Although a lot of them have recovered on Friday, but a lot of them have started to come down. And you have a lot of the banks and the Dow stocks, they got beaten down even more than they've already been. And the funniest thing to me is actually the fear and greed index. It's sitting on extreme fear territory. I mean, this is the time where people should be bullish. This is the time where people should be buying. But most retail investors, they get excited at the wrong time and they get pessimistic at the right time when they should have been buying, which is again pretty funny to me how this works. And a lot of you maybe have, somewhat doubted yourself over the past few weeks, or maybe you bought a stock a year or two ago and you haven't made money on it and you're just doubting yourself in general. You're thinking you made a lot of mistakes. Maybe you did make a lot of mistakes. But there's something I posted on Twitter that most people got surprised by. Most people never realized this, is the S&P 500 has been flat for 2.5 years. 2.5 years, the S&P has been pretty much flat. A lot of people got surprised. Now, if you look at the inflation-adjusted S&P 500, it's at the same level it was at in August of 2020. So we've been pretty much flat for 3 years on the S&P 500. It's not easy to make money whenever the S&P is flat for 3 years. But this is the best time to be buying, the best time to be accumulating if you're a very long-term investor. Now, if you compare this flat period to what we had from 2008, one of the greatest bull runs in history, it was easy to make money. Everyone thought they were pretty much a genius. All you had to do is buy the most speculative stocks, 0% interest rates. They raise money in the capital market, take 0% loans or 1% loans, and pretty much very few people were going bankrupt. Everything was fine. And a lot of people thought they were geniuses because the tide was lifting everyone up. Well, now it's not the case anymore, and stock picking is key. And even some of the stocks that I picked, I'm down on. And even though the earnings are fine, everything is fine, they might feel a multiple contraction, especially if you buy a larger cap stock, which is more correlated to the S&P. If the S&P is flat, your stock will most likely be flat, like Visa and MasterCard. If something like MasterCard has been flat for 4 years or 5 years or something like that, I mean, it's been pretty crazy in a lot of the stocks. But this is, again, something that I always say on Twitter and I say in my videos and I say everywhere, that this is the best time to be buying. The best time to be buying when it's not easy to buy. The worst time to be buying is when it's easy to buy, like it was in 2021. You remember 2021, everything was going up. We had the SPACs, we had the crypto stuff, everything was going up. For the most people, it was an easy time to buy. It was the FOMO time when everything is going up. It felt easy. You could just put buy and the stock will most likely go up. So everyone was buying back then, but you got the worst cost basis, the worst deals you could ever get. Why? Because it was easy to buy and everyone was buying. But now it's not too easy to buy. You have the fear and greed index, which a lot of you like. It's sitting in extreme fear. A lot of people are just dumping. I mean, I see it in my own group. I see it on Twitter. I see it in the YouTube comments. A lot of people are just losing hope and buying the dip that keeps dipping, or whatever people say. They're just losing hope. They're throwing in the towel, calling the stock market a scam. The stock market is unfair and it's all rigged and all that kind of stuff. And once you start hearing those stuff, once you start hearing those things, once you go on Yahoo Finance and you go on Tesla's earnings or something like Enphase and you see over 1,500 people chatting in the Yahoo message board, you could feel the desperation. I mean, you could feel how people are just scared. They're just pretty much done with the market. This is what I'm starting to feel with a lot of the sentiments that I see. I'm in a good position to gauge this sentiment because I have presence on social media. People give me feedback, people comment under my posts and stuff. But this is the best time to be buying when it's not easy to buy. Do you think it was easy to buy in March 2020? Many of you were in March 2020. It was not easy to buy. It wasn't at all. I mean, it felt like it was the end of the world. Everything was locked down. But the only way you were able to buy in March 2020 was if you ignored the bad news and focused on the fundamentals to see the kind of deals you were getting. I personally borrowed money on margin to invest in March 2020, and I don't recommend anyone doing that. It was like 20% of my portfolio. But I was just seeing, I mean, amazing deals I would never ever imagine of seeing. I mean, it was absolutely insane. And this was the best time to buy. But for most people, it was the worst time to buy because they couldn't do it, because stocks were going down. They were influenced by price actions and doubting themselves, looking at the news instead of looking at the fundamentals, which is key. Even in 2008, it was not easy to buy in 2008, but these were the best time to be buying. And I believe one of the best times to be buying is now. now in 2023, you have this reversal, you have a lot of deals on amazing stocks. This is the time people should be greedy, but this is the time now when people are fearful. People are asking me a lot of questions on YouTube. What is the safest stock to buy? This is the wrong question to ask. You should be looking for the highest return whenever the stock market is going down. When the stock market is going up, you should look for safety. But people do the opposite. They look for safety whenever the stock market is going down, and they look for risk at the top whenever the stock market is going up. I mean, this is the wrong way to look at it. This is not what I'm personally doing. I'm personally buying I bought a new stock, and I've been buying the dips on a lot of the stocks that I've been owning. The earnings have been fine, but they faced a multiple contraction. A lot of them are buying back stocks, so this is pretty much amazing to me. Now, no one knows where the market's gonna bottom, but something I like to look at, which got a little bit messed up since we got the 0 day to expiry options. This is the VIX index. A lot of people call it the fear index. I don't think so. It's mostly the volatility index of the S&P 500, now sitting at 21. Now, if you look at history, every single major market crash has not bottomed before the VIX pretty much hit 40. March 2020, we hit 40. 2018, we hit 40 and we went above. Same thing in 2016. Same thing in 2008. Same thing in the 2002 bottom. We hit above 40. Except last year in 2022, we hit around 38 or 39. We never actually came close to 40. And now we're still at 21. So it could get a little bit worse before it gets better, in my opinion. I would not be surprised if we go to 30 or 35 VIX, which would crush a lot of put sellers, and it would be ugly in general. If you look at the S&P 500, it's speaking a different story. I mean, it's looking like the sell-off on the S&P looks to be pretty close to being over. I was sharing this chart before. I said the worst case scenario is we touch this trend line and then we bounce from it. And this is a very strong trend line from March 2020 and the October low. So I would not be surprised if we touch it here around low 4,000s or high 3,900, around 3,985 or 3,990. Maybe we touch it over there and then we rebound and maybe we start a new bull run, 8 or 10 year bull run in the market. I mean, I would not be surprised at all because we have been flat for 3 years. Pretty much. This is what people miss. A lot of people are waiting for a massive market crash. But if we've been flat for 3 years, adjusted to inflation, it means a lot of these companies' fundamentals are starting to catch up to the share price, are starting to catch up to the price action. Being flat for 3 years is the same as having a massive market crash, in my opinion, because the stock market is going to eventually get cheaper as a lot of those companies are growing, and they are growing into the high valuations that they have, especially companies like Visa and MasterCard. Visa went from something like 37 times earnings. Now it's around 23 times earnings. I mean, and the stock has been flat for, I believe, 3 years right now, or 4 years for Visa. This is because the multiple was way too high. You have a lot of such cases in the market. And even if we don't have a crash, if we stay flat for a while, the fundamentals are going to catch up to a lot of these stocks. And we might not have this huge crash that people are waiting for, which is something else I want to tell all investors, is no one's going to know when this market is going to bottom. And if you're looking for good news or some news to buy the market, you're looking at the wrong thing, because stocks bottom on bad news. When stocks bottomed in March 2020, we were still locked down. There was no vaccine. There was nothing. We still bottomed. Whenever we had the SVB stuff in 2023, whenever I was buying the dip on the SVB, I mean, we did not have any good news. We bottomed on bad news. Same thing in 2008. We bottomed on bad news. We did not bottom on good news. So if you're looking for good news or for you to be comfortable buying the S&P, this is never going to happen. No one's going to be able to time the bottom. And the way I look at it, I like buying and dollar cost averaging down in a lot of those stocks. And I look at the fundamentals, but I don't really look for good news or for a reason to be bullish. You will never find a reason to be bullish. You will never find the perfect time. No one can do that stuff. The best way to do it, in my opinion, is to buy and dollar cost average down. If you're finding good deals, if you're not finding good deals, then maybe you could sit on the sideline and just collect 5.5% and maybe wait for the opportunity you're looking for. I have a watch list of stocks. I might share it later on in some YouTube videos, but I have a lot of stocks I would love to buy, and they're getting pretty close. One of them is Visa. I mean, I would love to buy Visa. I would love to buy Moody's. I would love to buy a lot of those stocks, and they're starting to come down. So I'm getting pretty excited. But this is the time to be greedy. This is not the time to be fearful, in my opinion. And this was my honest opinion on the S&P and what I'm trying to do and how I'm thinking about this whole thing. Thank you again for watching the video. It was not financial advice. I really hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.